Good morning, Fred Corsi.
Good morning, Kate.
How are you today?
I'm great. How are you?
Awesome. I'm so glad you're here.
It's a pleasure for me to be here. I'm excited about it.
I'm really excited to learn about your life today because we have this business relationship in real estate through Foundation Title.
Yep.
But I really don't feel like I know you.
Yeah.
And so I'm really interested to hear not just about your gutsy move, but also a little bit about your life.
Well, I have a few gutsy moves that I've made along the way. And from a career perspective, I'll tell you that in a minute. But first, a little bit about me. I'm from Pittsburgh. My father was a steel worker.
Imagine that.
My grandfather was a steel worker, came over from Italy, and so spent my youth kind of getting the work ethic that I have now, that you have to earn everything that you get. No one's entitled to anything. So if you want something, you got to work hard for it.
Newsflash, I agree.
Right. And I mean, I don't know that that's a very widely held belief anymore in some circles. I don't know, but
I almost said, can you say that again?
Right. First person in my family that went to college, decided that I had kind of a fun time in college, let's say, so that my grades weren't what they should have been. So I decided that I was going to try and stay in school as long as I could. And one way to do that was to go to law school.
Where did you go to college?
St. Vincent College in Latrobe.
Wow. Yeah.
It's where the Steelers have their training camp. Had a little bit of fun, too much fun in college, and decided I wanted to go to law school because it was a good way to stay in school for a longer period of time. I applied to a bunch of law schools, and I didn't think I was going to get in anywhere. And I went to one of the priests there at St. Vincent, and I said, Father, I kind of want to go to law school, but, I got all this baggage, let's just say. And he said, well, let me see what I can do. And I got in, 2 months later, he calls me into his office. He said, hey, I got you into law school. Good news is, I got you into Dayton. I said, oh, okay, cool. I said, what's the bad news? He goes, well, they're Marianists. Well, Marianists is a different kind of sect of the Catholic faith than what these guys at St. Vincent were. And I was like, you know what? I think I can live with that stuff, Father. Don't worry about it. So I went to law school at UD. Loved it. I took that. I mean, I looked at it as though it was my job. Okay, when I went to law school, all my buddies got out of college, and they all had jobs, and I was still going to school. So I said, well, this is going to be my job. So I said, I got to commit 8 to 10 hours a day to this, and quite frankly, that's the only way I got through that, to be honest with you, because it's kind of like they throw everything at you. So I got through law school and moved. I was going to move back to Pittsburgh, okay? And I was interviewing with the district attorney's office in Pittsburgh, and they were going to make me an offer. I was going to graduate in May and then start at the DA's office in Pittsburgh in July. And I got a call from the DA's office a week before I graduated from law school, and they said, hey, Fred, we got a challenge. The county is setting their budget right now, and they have a freeze on all hiring. Okay, so we can't hire anyone. All right. So I'm like, okay. I had put myself through law school, so I had borrowed all the money for. My dad was a steel worker, right? So I mean, great job and very proud of him, but he didn't have money to send.
No college savings plan for Fred.
No. I said, well, I got to find a job here. I don't know what I'm going to do. So I started looking in the yellow pages. This is all true, right? I'm looking through yellow pages, and I've started calling law firms, okay, and saying, hey, do you need anybody? I just graduated. Do you need anybody, right? Well, I got to Alexander, Bunsen, and Associates, okay? So I was still in the A's, so I was still in good shape there. I called this guy, and I said, hey, my name's Fred Corsi. I just graduated from law school. I kind of need a job. You looking for anybody? And he says, yeah. He says, as a matter of fact, we are. He says, do you know a lot about real estate law? And me, I'm like, I just got out of law school. Yeah, I know a lot about real estate law, man. What do you need? I didn't know jack about real estate law, but I'm like, hey, yeah, I know real estate law. So he says, okay, come see me. So I came, interviewed with him, and I hit it off with the guy. he says, "Well, I can pay you $25,000 a year." This is in 1989, and I said, or 1990. I said, "Okay, I'll take it. $25,000 a year." I mean, think about it, right? Like, and I had all these debts to pay, but I had a job, right? I had a job. Started working with this guy, and he had an account with a relocation company at the time called PHH Home Equity, which became Sendan, and he was the regional counsel for all the relocation transactions that they had in Western Pennsylvania. Okay, so what would happen is, if I was a seller and I was moving away, I would sign power of attorney for this law firm to go to be at my closing for me, basically, and that's what he did. Started doing the stuff there and with him, and I started meeting more and more real estate agents, et cetera, and he was letting me have more and more responsibility, and I started to get close with a lot of the real estate agents in Pittsburgh, in downtown Pittsburgh, and there was a large it was right 1991, 1992. There was a large influx of Russian Jewish immigrants into the United States at the time, and they came into the Shadyside and Squirrel Hill sections of Pittsburgh. Okay, so we have all these people who are just coming in. They don't know the language. They don't know anything about anything, and they're all trying to buy houses. Okay, so these real estate agents in Squirrel Hill and Shadyside there's a large Jewish population in that area already, so that's why they focused there. Yeah. So a lot of the agents would go out and do these deals with these people, and they would have closings with them, and they'd need people to, try and translate or whatever. Well, I had no idea Russian or anything like that, but I knew these agents, and I started going to these closings, and I started hitting it off with these real estate agents. Then PNC Bank did a large bond initiative where they put all this money to have these immigrants could have low interest mortgage loans. So I went to went to PNC and I said, "Hey, I'll close these loans for you. Put me in touch with the real estate agents that are doing the deals." Blah blah blah. Next thing you know, I was the only attorney in Pittsburgh approved to close those deals with all. So I'm in these closings with these Russian people who had no idea who I was or what I was. They couldn't understand me. I couldn't understand them. But we had good relationships. I started then, and to this day, I still think everything is based on relationships. If you create relationships with people where they trust you, like you, etc., and that was a turning point in my career, where I then became kind of like the one of the closing attorneys in Pittsburgh, especially in the East End, up in Shadyside and Squirrel Hill, where the real estate agents knew me and they trusted that I could get things done. And it's all went from there. I'm probably talking way too much here, right? Yeah.
No, I'm intrigued. And I think that's such a great example of seeing an opportunity.
Yeah.
And instead of saying, "Oh, somebody's going to get that business," or I'm sure they're going to hire one guy, like, you're that guy.
Yeah.
So you injected yourself into an opportunity and then made it happen.
If you sit around and wait for someone to hand you something, you're going to be sitting there for a long time, right?
Right.
And if you want something, you've got to go out and get it. And you've got to have, you have to be persistent sometimes to where you're considered by some people to be a pain in the ass, to be honest with you. So,
yep.
I mean, if you, and that's me, I mean, if you want something, you got to go get it. You can't sit around and wait. So, I mean, that's what happened to me. And that's how I got noticed, actually, by a lot of the real estate agents in that area. And there came a time when there was a position that was available from a regional real estate company that was small at the time, but they needed a general counsel, and I got put in touch with the folks over there, and I became what they call captive counsel. I worked for a large law firm, but I only had one client, and it was this real estate company, and from there started working for their title companies, starting their title companies, etc., and I've spent the better part of 25 years there.
Good for you.
Yeah.
So my dying question is, you went to school at St. Vincent's.
Yeah.
how many Rolling Rocks did you drink?
Well, that gets back to the other part of why I got in a little bit of trouble over there. But I will say this though, Brandon, when I was in college, we couldn't afford that much Rolling Rock because we had a lot of the $5 stuff that you could buy a case of, but we drank our share, believe me.
What are those cheap beers in PA? Iron City?
Iron City.
Iron
is the
City,
one.
yeah.
But so the question that I have, in all seriousness, prospect, present, follow up, right? So in sales, prospect, present, follow up. Sounds to me like you just had this, I'll use the word aggressive tendency to go out and just continue to follow up and build your business through relationships. And started with just Alexander Bunsen.
Yeah. Yep.
And you called them in the yellow pages to end up actually now doing on your own through Foundation's title what you did for 25 years with a regional real estate firm.
Right.
So tell us about Foundation's title.
Well, first I had left the Cleveland area. I went to Cleveland for the regional real estate company to start the title company over there, run the title company, started a title company for them in New York State, in Erie, PA, a couple places. And they asked me to move to New York State to run the real estate brokerage there. They had in Western New York, they had real estate that there was a bunch of reasons why they needed someone up there that they felt they could trust, et cetera. And as a kind of like a culture builder. And that's, again, a lot of what I do because of the relationship thing. I mean, I think, I would rather sit here and talk like what we're doing right now than text someone or email someone. I just think that still is invaluable. That's how the relationships
brought us on board.
Exactly,
you came to
right.
our office.
Exactly right. They had about 1,500 agents, and I was there I went right before COVID started. Actually, I was there, and then 2 weeks later, COVID hits. So that was interesting because the whole state of New York was in lockdown, literally lockdown for 6 months. But I was there for 2 years. Did well from the business plan. We had exceeded our 5-year expectations in 2 years. Came back to Cleveland, and I got a phone call. This was in October of 2022, I think it was. Yeah. Or maybe 23.
That'd be a year
22,
and a half ago.
22.
Yeah.
It was from a person that I had known at First American Title Insurance nationally. He was their agency. He was the head of their agency stuff nationally for a long time, and I knew him from back in Pittsburgh. And he said to me, "Hey, Fred, there's an agent of ours in Nashville who's been looking to get into the Ohio market, and he's looking for someone that he can partner with to do that. Do you know anyone?" And I was thinking to myself, I said, "Yeah, I said, I'll think about it. Let me think." And a couple of days later, I said to myself, "Well, hell, I can do it. It's me, And I thought to myself, okay, well, I've been at this place over here for almost 30 years. I'm 57 years old. What should I, And I said, to hell with it. This is what I wanted to do 30 years ago. I always said, do your own thing. Do your own thing. And I called him back and I said, "You know what? I'm in. I'll do it." And he was like, "You gotta be kidding me. You sure about this? You want to, you're kind of set, where you are, Nah, I want it. I want to do it." And
Interesting.
And I called, I said, "I'll do it." I called my partner, Mara, who you guys all know, asked her whether or not she would be interested because I wanted to do this. I couldn't do it alone, and I needed the way her and I had worked together for a very long time, and she is
she's strong,
unbelievable on the operation side of things. Yeah. And she said, "I'm in," and I said, "Okay." I said, so we started, and we in January of 2023 we started. We opened the business, and our goal was to have two title companies, one that was a traditional title and escrow company and one that was a joint venture. But the challenge that we had was that we had both come from, Mara and I both had come from backgrounds where joint ventures were kind of like taboo. Mm-hmm. Okay. Especially you guys, the regional real estate company that I was at, I mean, that was very much frowned upon because they had their own and they didn't want their agents to be out there,
I think that's still highly misunderstood in our industry. Even as licensed agents that I have conversations with, there are many of them out there that still don't understand what a joint venture is, and that maybe the brokerage that they're working underneath already has a joint venture.
Right.
And so they don't want you to join a joint venture because you're taking money out of their pocket that they're making from your business.
Exactly.
Yeah, it's still just not very well understood.
Exactly right.
Yeah, when it matters if you're doing a decent book of business. If you're a part-time agent or you're looking to, maybe retirement slow down, you're selling 5 or 10 houses a year, it might not be as interesting to actually the joint venture itself to want you in it.
Right. I wish more agents saw it the way that you just explained it right there. And we can get into that. But what we wanted to do was we wanted to create a JV where we had the challenge with a lot of the joint ventures out there right now from a title standpoint is that they get diluted. Okay. And what I mean by that is that you have agents who are carrying, for lack of a better word, other agents, okay? Agents who are...
Not only in the agency space, but also in the joint venture
Exactly,
space. Yeah.
exactly. Like that's what they say, right? 80% of the real estate is sold by 15% of the agents, right? And those folks, what our thinking was if you can get those folks, the big producers who know how to sell and know what they're doing, get them together, you can have a smaller operation so that service is better, the relationships are there, and it ends up being better for all the agents involved. So we started that. Our goal was to have 125, 150 agents and go across the state because we have relationships a lot of places in the state. And so far, knock on wood, we have right now, last year, 2024 was our first full calendar year of operation, and we've far exceeded all of our expectations, and we now have 40 agents across the state, and we have offices now in the Cleveland market, in the Toledo market, and in the Columbus market. And that we fully anticipate that by the end of this calendar year, we will probably have another office in Cincinnati because I'm talking right now to some folks in Cincinnati who are looking to come on board, and they would be kind of like it wouldn't be just opening an office in Cincinnati and going out and starting to hunt for shareholders. There's already an existing operation there that wants to be affiliated with us. So that's where we're at right now.
Sounds like a no-brainer with that part.
Yeah.
One of the things that I really appreciate about Foundation Title and the relationships that you just described is it opens up my circle to relationships with agents in Columbus and Cincinnati and Cleveland that I wouldn't have if we weren't all part of that joint venture.
Yep, and we're seeing that already too. But I can't tell you, on more than two hands, I would need more than two hands to count the number of referrals that have already taken place inside that group of agents who will say, hey, I'm in Catawba. I need an agent in Columbus. Okay, here. Who are our agents? Even in Cleveland, there are agents on the east side who say, who can I call on the west side? Or in Akron or what have you. So it's a tremendous opportunity. That was something that we didn't even anticipate that has just kind of like organically grown. And now I know that there's a couple of the agents who want to do their own a foundation Facebook page just for the agents in the JV to do referrals, et cetera, and to talk back and forth.
Because it is all about the relationships, and that's where the beauty happens.
Right.
A distinctive approach to passive income with luxury vacation rentals.
For more information, check out our website, twinvestors.com.
So off camera, we're talking about expansion, and there are some cool things that are happening for both of us that we actually didn't know about. And interestingly enough, you said very early on in the phone call about starting your career that you knew a lot about real estate, and you knew Jack was the word you used.
Right.
One of the reasons that you led with that is because you needed a job, and then that all spawned into this niche that you created in the shady side market of Pittsburgh that further worked into relationships. So you've got a mark that you said 100 to 125, maybe 125 to 150 relationships in the JV.
Yeah.
And you haven't hit that yet.
No.
But I'm curious. You said we're blowing away our numbers. We're doing far exceeding, I think is what you said. Tell us about that. Far exceeding what? Because you haven't hit the 125.
No, we haven't hit the number of agents. But the good thing is that we don't know that we're going to need that many, because what we've done is we've the agents, the relationships that we've been able to create are far more productive, let's say, than what we anticipated. Our partners are significantly more successful than what we anticipated we were going to have in the first 18 months.
So you built your model. You had an idea of the number of producers that you needed based on the families that they would serve, listing, selling, the closing that you would be able to handle, and you're exceeding that.
Yep.
Can you tell our listeners, so there in title, there is lender's coverage for insurance, and then there's owner's coverage.
Yeah.
And we buy a lot of real estate, Kate and I do. We buy it in multiple states, which led to our expansion conversation off camera. And we've got some cool expansion conversations that are happening off camera because we don't want to throw those out live yet. Until they're inked, we'll leave that as an off-camera conversation. But I did want our listeners to understand title insurance and ensuring that, making sure that if you're going to buy real estate and you're not doing a loan, you can opt in or opt out of the owner's coverage for title insurance.
Right.
I would always tell any buyer to accept the coverage. Tell them why.
The title insurance, what it does is it guarantees you as an owner that there are no claims against your title to the property that predate your ownership of the property. So the insurance policy itself is not like any other traditional insurance product in that you don't pay a premium every year or every month. It's a one-time premium that you pay based on the purchase price, based on how much you own or how much you paid for the property, and it's mandated or it's governed by the state. The rates are set by the state of Ohio. It's not something that we just make up.
Or whatever state that is.
Exactly right. On a $100,000 property, you're looking at about $800 in title insurance premium. For that $800 investment, it's foolish not to have the protection that you get that a title insurance policy would bring you in terms of, say, an unknown descendant of someone back in the chain of title who claims that they own a piece of the property, or a fraudulent document that was signed, or where a signature was forged, or a signature wasn't obtained. All of that kind of protection you get is worth that peace of mind is worth the $800 that you pay one time. And for that reason, I won't close a transaction where people don't want title insurance.
Sure.
It has nothing to do with the cost or the money or anything like that. It's just because I in good conscience can't allow someone. I don't want to be on the hook for that myself, to be honest with you.
Right.
Because if
you know they're going to loop you in at some point.
Exactly right. And if there's something
for sure
wrong,
they will.
Right. And if there's something wrong, I'm the guy that they're going to blame for it later.
We may have actually had that scenario happen. I just learned that today, and I may have learned it last week. I literally last week had a client, first-time home buyer, young guy, and he was asking about this fee on the closing docs, and could he opt out? And he said, I don't really want to pay this $1,200. I think I'm going to opt out. And I said, don't do it.
Yeah.
I talked to him for probably off and on 2 or 3 days, like here and there. And I said, please, I think you should do it. And here are the reasons why. Yeah. And he did. He did. Good. Finally. But you might not have actually closed it if he said no. I didn't know that.
No. Well, if there's a lender involved, they require it, right? As Brandon said. But
it happened to us in a property actually that we owned, and we bought it from a foreclosure situation.
Yeah.
And we paid cash, and it was not required, and we because I knew what I was doing in this field, added on an owner's policy that was not being offered by the seller.
Right.
Well, thank goodness we did, because a year or so later, popped an old lien against one of the rear parcels for about $24,000.
Wow.
And had we not done the owner's policy and added that on, we would have been responsible for paying that $24,000.
The financial literacy piece and the recognition for the listeners is that title insurance insures you from the day that you purchase back.
Right.
And it in perpetuity.
Correct.
And so from the time that parcel of land was ever developed, you might have a huge tract of land, and then it became a farm, and then a farm sold off and it became lots that may have been acreage. And then that acreage is parceled off into individual lots. And as that continues to progress forward to today, the title insurance, if you close on a half-acre lot, a $350,000 purchase, and you choose not to get owner's coverage, you're exposing yourself all the way back to the time that land was ever developed.
Plotted, like could have been 1800s.
Yes.
So there's real estate transactions and all the things that people do to get a buyer or a borrower, if it's a refinance, to the closing table. It's funny. I say funny because I was having conversations this past weekend with some individuals about how Kate speaks realtor and Brandon speaks lender.
Yeah.
Right. And those are not the same language. They maybe the same language, but definitely not the same dialect.
No.
And it's tough for a real estate agent that puts a contract together to understand that all of these particular things have to happen to get someone to the closing table. And real estate agents, generally speaking, and I'm of course narrowing the focus here because there's a lot of things that real estate agents do. If we boil it down to its simplicity of getting a contract together, you're going to negotiate the contract, the price, the possession, the closing date, and you're going to want to know when the appraisal's going to get in, and then you're going to want to know when it's closing. There's not much else that happens from a real estate perspective from that deal starting to that deal finishing.
Don't forget the refrigerator.
Exactly.
Inspections.
So
I was gonna say
all of those little
right?
things that go on from a lending perspective, working through those inspections and working through an appraisal and working through title and working through homeowners insurance, which has become a huge component of lending today because of all of the claims that are happening and insurance companies pulling out of certain states.
Roof
and the premiums,
exclusions.
increasing. It's just not what it was. And I think that in and of itself, back to the relationship conversation that we were having, it's important for all individuals in a transaction to recognize kudos to you for building your model the way you did. You're doing more with less.
I'm hearing that there are some contracts that are made subject to a house passing a clue report. And for those who don't know what the clue reports are, it's basically a credit report done by homeowners insurance companies where they look at the house to determine whether there have been any claims. And I'm seeing a lot. I'm hearing, I should say a lot. Are you seeing that
So that's actually something we have in our current purchase contracts. If they opt in, they will get a clue report.
Yeah.
And what happens from the buyer's perspective and why it's helpful is not all sellers disclose everything they're supposed to disclose. And we will catch.
Wait. Really?
Yeah. Not everyone is completely and 100% honest, if maybe you could believe that or not.
Hard to believe, yeah.
Yeah. So we catch sometimes where the homeowner said that, they didn't say that there was a flood or the roof needed repaired. Right? Yeah. And sometimes they forget. I'm not throwing everyone under the bus. Sometimes people really just didn't remember that thing if they've been there a long time. But that clue report will help clue in buyers to say, oh, well, this thing wasn't disclosed, but you made an insurance claim. Tell us more about that.
Yes.
So from a liability perspective, I love it because we're giving our clients as much information as we can.
Right. Because there are insurance companies who are backing out of states, et cetera, because of the high claims. That is now a bigger part of the process, is to have these clue reports. As a buyer, you will want one because the last thing you want to have is to find out that your
Problem
homeowner,
child.
Or claim it's denied.
or your insurance company won't insure you because they find out that there were all these claims that were never disclosed.
A lot of insurance companies now are excluding roof coverage if the roof is older than 10 years old.
Oh man, yeah.
That's a whole new thing. They'll do your insurance policy, but no roof coverage.
Right.
That's happened a few times. I do know some insurance companies are also actually wanting to do inspections of their own.
Yeah, that's on the rise.
Physical inspections.
Yes.
So when you underwrite insurance, from a title perspective, and you have to deal with your underwriters going through and looking at certain things. It's no different.
It's the way
from a
they run their
property and
business.
casualty perspective.
Is
as
it
well.
making your job as a lender more difficult, Brandon?
Yeah, there's actually quite a bit of increase in annual premiums associated with insurance. You got to battle that with better credit scores and higher deductibles that allow someone to actually qualify, keep their payment in check. So there's a big push for flight to quality, just like you talked about from the relationship piece with the number of JVs or folks in the JV versus having 125 to choose from. So as far as your JV partners, you've got, what'd you say, 40, 45?
40 now, yeah.
So the whole piece that we're talking about right here is relationships. We're talking about quality. You're talking about transparency, which is a big thing. There's a saying, today's friend is tomorrow's enemy. So don't do it over a transaction. Just get it all out and make sure that everybody's aware so they can make an informed decision.
So we've been talking about real estate agents, and we have some things that we say about agents, myself being one of them, in full disclosure, with what real estate agents are typically like. And you have dealt with a lot of real estate agents, and we do kind of have, the majority of us, describing factors and similarities that we might be the life of the party. Some of us are loud, obnoxious, outspoken. We do also like to enjoy cocktails. We're known to be kind of the life of the party. Does that ring a bell to you?
A successful real estate agent, in my experience, is one that is persistent, aggressive, and smart. And you can say all this other stuff about life of the party, et cetera. It helps to be outgoing, obviously, because you're a salesperson. But I think that the successful ones, the ones that build and establish a brand, so to speak, like you have done, are the ones who are aggressive, energetic, and they build it on the relationships. And I think that sometimes real estate agents get a bad rap from that perspective of, they're obnoxious or whatever. They're obnoxious people in every profession. I mean, hell, I'm a lawyer. I mean, you don't think lawyers are obnoxious? But I think that in order to be successful, you have to be aggressive and persistent. And I think that, and you have to be relationship based. And if you look at every successful realtor, they are good at, they're comfortable in a room talking with people that they've never met before. Okay. And they are also good at building confidence in them, not necessarily by pushing themselves onto someone, but just by being themselves. And there's a certain, and in real estate especially, you need to have confidence in the person that you're working with, which is another reason why I don't think that this AI stuff will ever replace real estate agents.
Well, they just tried it with Zillow.
Yep, exactly.
Failed miserably.
Exactly.
I mean, it's going to work and it'll get better because AI is going to continue to get better. And the difference with what you're describing is AI is not going to be done en masse. Mm-hmm. You will use parts of AI to generate a more efficient transaction.
Right.
And you'll probably find that as you do your searches through records and various things that become online.
No doubt.
But a lot of what's been done in our record keeping is not something that AI is going to be able to very quickly get in tune with, because our record keeping, that's why you have an abstractor to go do the search.
Exactly right.
You have to have a person that's going to go do it and then interpret it and put it together the right way, because you then have to make sure that everything they're putting on paper is accurate.
A person still has to go, in a lot of cases, physically to the courthouse.
Yes.
And pull this documentation.
Yes.
I don't know that our listeners, viewers would
But in 90%
know that.
of the situations, yeah.
You're sending people physically down to pull data and interpret it.
And abstracting is kind of like a dying breed. It's kind of like shoemakers. You know what I mean? Like, there aren't too many of them. I mean, the average age of these title abstractors now has got to be over 50. And there's not.
What's wrong with that, Fred?
I know, right? But there's not a lot of young people that are getting into that business. But
sounds like an opportunity.
People want to be able to look you in the eye and say, Kate, what do you think I can get for my house? Or when you tell them, well, you know what, Fred, I think that you need to update the kitchen or whatever. You need to be, there's no substitute for that,
No.
You will, and that's just getting in the game, because where the real work is done is negotiating the transaction and getting it to the closing table.
Exactly.
I've also realized over the years, a lot of it is just the filtering of human emotions and not letting those translate to the other side.
Right.
You've got to be the filter in the middle.
Yep.
Because money, even if the money's work, if someone gets mad, they're mad enough sometimes to blow the whole deal. And that's part of our job as a professional, to not let that translate.
Well, it's money, it's motion. A lot of time that happens out of fear because people aren't educated. And when you mix all that together, it just becomes a recipe for what she just described.
Buying, selling, or investing, we are the Creative Ones. Visit us at creativeones.com.
Well, we were talking about expansion and things and what we were trying to do with the JV, et cetera. But I've been interested in the expansion that you guys have been able to do. Talk about, from my perspective, the fund, how you've been able to expand the fund that you guys have, and how there's ways that I think there are ways that we can together expand and help each other grow. How have you been able to expand as much as you have already?
You described it, I think, best, Fred, when you thought you had to have 125 people in your JV and you have 40. And the reason you have 40 is because of the quality of the people that you have around Foundation's title. And you also mentioned a name a few minutes ago, Mara Boris, who you needed a wingman, per se, wing woman in this case. And you were able to make that decision out of confidence because you knew, as a collaborator, right? You talked a lot about relationships, and what Kate and I really do well is collaboration. And for us, the whole idea of what we've been doing ourselves and expanding what we want, our goal is one luxury vacation rental a year for 10 years.
Personally.
And we're in year 4. We're very close to accomplishing that, and it's March. So we'll have 4 in 4 years. Check. And what we found was, through searching and the analysis that we bring to the table through our relationships, and off camera, we were talking about some expansion that Foundations is doing, which is interesting because not all states function the same way for escrow, for closing. Some states use a title company and some states use attorneys, although attorneys, it's called an attorney state. And typically speaking, no shots at attorneys, but they typically don't move as fast as real estate agents or lenders.
They don't.
And that's one of the ways that you've figured it out in your career, is that, which is why you were captive counsel. And you've been able to brand that. And we have been able to do the same. And the fund is built on collaboration. We've got north of 20 companies and 130 people head count. So an advertising agency, an accounting firm, financial planning firm, all the things that go into building the fund out. And lest we not forget, Yonder Luxury Vacation Rentals is the property management company. And they're north of 36 people themselves in headcount just for Yonder. So when we bring all of those people together, and you used the hand gesture earlier, indicative of partnering and collaboration. We focus on that, and that's how we've been able to propel the fund forward. And I'm interested, when we're done talking today, a little bit about some of the expansion ideas that are going to come full circle. It sounds like they're going to happen pretty quick.
I think maybe the word of the year for 2025 might be expansion. It's seemingly shaping up to be that. And I don't even know that I entered this year thinking that way. And
No, we didn't.
It's evolving at a rapid pace to where that's literally what we're doing.
Now, more than any time in the last 5, 6, 7, 8 years, is the time to expand. I think you take advantage of times like these where there's a new I don't want to say a new beginning. That sounds cheesy, but I mean like the chance for a new beginning. People are looking for alternatives to how they used to do things in the past, because it's been so long that everybody's kind of like ready, set, stop. You know what I mean? Like you stop, go, stop, go, stop, go. So I think expansion is something that will be, I think we'll see in a lot of different industries, especially in ours, over the next 18 months, a lot of expansion.
Yeah. So your gutsy move was left a cushy corporate-y kind of a job, right?
Yeah.
After building your career as a lawyer. And then you decided at the age of 57 to quit that cushy, easy kind of a job and launch into a brand new business. And now your brand new business is gaining traction, growing rapidly, and you're saying the words expansion. And that's just like the entrepreneurial spirit, the definition.
So my question would be around that is January 23, you had the idea in the fall of 22. These conversations come full circle. Wait a minute, that could be me. January of 23, you start it. It's January 25, March of 25. So you're in month 27 of officially being live.
Yeah.
And how many states are you in right now today?
Well, right now we're in one, but I think that by this summer, we'll probably be in 8 or 10.
And there's some cool stuff to talk about that will happen, off camera. But it's pretty great because when we just learned that this morning, we've been having similar conversations, and I think there's going to be more to come from it. Pretty awesome.
For sure.
Well, thanks for being here, Fred.
It was my pleasure. And I tell you, anytime you need a guest or I'll be more than happy to come with you guys. If someone's stiff or whatever, I'm in, man.
Thanks.